Hello everyone, Giridhar here. Today the topic is going to what is checks, how it is being encashment or getting cleared in banks, and why it comes under the Negotiable Instruments Act. These things we are going to see one by one in detail. So, what is checks? Check is a type of bill of exchange instrument. Bill of exchange is nothing but any written statement on a piece of paper with an unconditional order, like pay this much amount of money from one party to another party within the stipulated period. This is called bill of exchange with an unconditional order. So that's how the check works. So obviously, checks is a type of bill of exchange instrument. Okay. So the next thing is the check will be valid up to 90 days. Suppose if a person gives you a check on today's date, today will be the day one. Okay. The date will be mentioned at the top right corner in the check leaf. So up to 90 days, the check will be valid. On the 91st day, it will lost its value. We cannot encash it at the bank counter. Okay. So before this 90 days, we can use the check and encash it to in the form of exchange of cash. Okay. The next thing is Negotiable Instruments Act. Why check comes under Negotiable Instrument Act? First of all, let me explain you. Negotiable instruments is like a two contradictory words combined together to phrase a new word. Okay, because an act is rigid one. We cannot. No one can modify or edit the or rephrase the words in act, correct? But in case of negotiable means viable to change based on the discussions. For example, during salary discussions, the salary can be negotiable in job interviews. Okay, so Negotiable Instruments Act, so these two words are contradictory but comes here as a single new word. How is it possible in this case? Let me explain with you an example here. For example, Ram issuing a check, a person, Mr. Ram is issuing a check in today's date, okay, and due date for it is 90th day. Up to 90 days it will be valid. So the 90th date fall on Sunday. Sunday is predefined holiday in all the financial institutions, correct? Not only financial, every business transactions are getting leave on Sunday. Okay, so in this case, the check should be encashed on working day before the due date. That means either if the Saturday is working day, means that Saturday you can use the check, or the day before Saturday, the Friday we can encash the check, because on Sunday the bank or financial institution is on holiday, so we cannot encash it on the 90th day. So this is the case one. Okay, suppose case two. Here the same person Ram issuing a check in today's date, but the due date for it falls on a working day, Monday. Okay, but due to some public emergency or any chaos like this happening in your city, so the government declaring it as a holiday for all the institutions, for all the financial institutions. In that case, even though it is a Monday, but it become declared holiday. So in that case, the check can be encashed on the next working day after the due date, which means on the next day of Monday, that is Tuesday. Okay, in case one, it is before the due date. In case two, it is after the due date. But both these cases comes under the Negotiable Instrument Act. So now you can understand why it is negotiable. Why the word comes Negotiable Instrument Act. Check comes under the Negotiable Instrument Act. Okay. The next thing is, who are all the parties involved in checks? Okay. Three parties involved in checks. First one is drawer. Drawer means one who writes the check, or payment initiator, we can say. Okay. And the next one is payee. Payee means payment receiver. Okay. And the next one is drawee. Drawee is nothing but a bank. Okay, here in this example you can see Mr. Satyadev as a drawer. He is writing a check to Raghavan to payee. Here Raghavan is a payee, and Raghavan will go to the bank, that is drawee. So these three are the parties involved in any check transactions. Okay, and next one is clearing of checks. Okay, suppose you are having an account with the SBI. Okay, suddenly due to some emergency, you need 1 lakh rupees in your account. So your friend is helping you. Your friend is having account with IOB bank. Okay, he is having a check leaf. So he is writing 1 lakh rupees to your name, and he gets signed and give it to as a check. Okay, now this check, whether you will bring this check to your SBI bank or you will deposit in your IOB bank. Okay, here we are going to see. In this case, you have to submit that check. Even though it is IOB check, you have to go to your bank. That is, your bank account is in SBI. So you will deposit it in your bank counter. It will be termed as outward check. Okay, the bank employee or bank personnel will ask you to duly fill the deposit form, which means your account SBI account details and stapled with your IOB check. Okay, now what the bank will do, they will scan the check, IOB check, and they will send it to the IOB bank. Okay, via a what is via a hub. There will be a clearing hub for checks. It will be all over India. So this is how the check getting scanned and sending from one bank to another bank. So once the receiver bank receives the check, they will verify the columns like IFSC code, whether IFSC code means the number for each branch in a bank. Okay, whether this IFSC code is valid or not, they will check. They will check the MICR code. MICR code means that is specially for check leaves. Okay, for every checks there will be a MICR code. Okay, IFSC code is for every banks, for every branches. Okay, so next thing is they will see whether that person, your friend, is having account in IOB, right? Whether he is having sufficient fund in his account or not. If all the things getting tick, so the amount will be transferred from IOB to your SBI account. This is how clearing of check happening nowadays. Okay, and check truncation system. The word may be seem new to you, but these things now I have explained you, right? Those things are called as check clearing. Okay, check truncation system. I have said you, right? The bank employee or bank personnel will scan the check, and the scanned copy, electronically scanned copy, will be sent to the receiver bank. Okay, that means payment banks who is going to get pay the amount. So this is the scanner. In the scanner, this side they will here they will insert the check, and it will get scanned and took a u-turn, and it comes outside. Okay, so this is the latest one after 2010, 2010. RBI implemented in all the banks check truncation system. So now banks can easily scan the checks and transfer it to the respective banks the check belongs to. Okay, so there is no physical movement of checks here, because in early days, if a bank receive a check means outward check means they will bundle it. I mean, they will collect all other customers check who are outward checks, and they will bundle it and they will send it to a hub, and from that hub it will go to all other banks, and from that banks it again comes to getting clearing. So these things involve so much physical process, physically movement of checks. So this can be avoided using this simple scanner nowadays. And there is a elimination of transportation cost in this, because for transiting of checks from one banks to another banks will be a cost wise one. Now it is being eliminated and reduces fraudulent. This is the most important point, because during transit some may tamper the check, some may modify the check. Okay, so those things are all happened in India. So now RBI has introduced only CTS checks, because nowadays all the banks are giving check truncation system enabled checks. Only these checks are getting issued by all the banks, because it can be easily scanned and easily encashed at any banks. Okay, and the next thing is no outstation check collection charges to be levied. lived. Okay, so outstation check collection means from, for example, if a person depositing a check, okay, that check belongs to a other state bank. Okay, so now from one state border to other state border it has to cross. Okay, so there will be some interchangeable charges getting paid by one bank to another bank in those cases. So those things are, these all are things getting neglified, okay, in this using the simple scanner. Okay, next one is, this is the latest news from the RBI. In December month, I think so, in December monetary policy committee, RBI mentioned like, so far we are doing check clearing in 3 business days. Now we are going to expedite the process, and all the checks are getting cleared on real time basis. Like in morning, if you deposit a check, means within 2 hour or 3 hour, the your account gets credited with the amount of the check. But nowadays it takes 2 to 3 days, but we are going to expedite the process as per the governor statement in RBI. Okay, the next one is check bounce. This, it's not a simple one. Okay, because it will be valid and it is a powerful one in the court of law. Suppose when the payee, here payee means payment receiver. Okay, in our case, the payee is Mr. Raghavan. Okay, Mr. Raghavan presents a check to the bank for the payment, and the check is returned unpaid by the bank with a memo of insufficient funds, which means the check which was given by Satyadev to Raghavan, the Raghavan took the check to his bank, and his bank scanned the check and sent electronically to other bank. The other bank says, there is no sufficient funds in Satyadev account, so we cannot make the payment. Like this, if it is happens like this, means it is called check bounce. Not only for insufficient funds, there are many other cases the check can be bounced. For example, the check may get teared at one end, means, or the data is modified, or any acid has been split over the check. So in these cases, the check can be dishonored. Dishonored means can be cancelled. Okay, but in case of insufficient funds, if for the reason insufficient funds, if the check is getting dishonored, means now the payment receiver will go to the bank, will go to the court of law, and they can sue a case against the payment initiator, against the one who signs the check, because it is like a fraudulent activity. You don't have any sufficient fund in your account, but you are giving a check which got bounced in the banks. So it is an offense under section 128 of NI Act. NI Act means Negotiable Instruments Act. Okay, for this check bounce, banks mostly charges penalty for the for those who initiated the check. In this case, the Satyadev will get the penalty for not maintaining sufficient funds for the checks. Okay, so the penalty ranges from banks to banks. Mostly above 500 only I have seen, from 500 to 1000. Even though the bank account doesn't have enough funds, suppose the penalty will be in minus 500, minus 1000, it will go in minus. Okay, so the next one is, there is an insufficient balance in the account of Satyadev. Now, bank will give you the check bounce notice. It, in banking term, it is termed as check bounce memo. Okay, that memo is the most powerful one, because it can be used in the court. Okay, court of law, and you can surely win the case if you sue the case against the check initiator who has given the check, because it is clearly stating insufficient balance with a bank stamp and the bank's manager or personal signature. So it is a valid instrument for you to produce before the jury in your court of law. So this is the check bounce mechanism. Okay, so I think I have covered enough for checks related alone. I mean definition and why it comes under negotiable instruments acts and all. In the next session, we will see what are the types of checks. and how it is being used in next session we will see. Stay tuned.